Hey, good evening, ladies and gentlemen. Welcome to this evening Corporate Connect session. My name is Sunny. I'm your host for today. We are glad to welcome Marco Polo Marine this evening, as well as our audience from Mumu Live. This Corporate Connect webinar is brought to you by SIAS, supported by SGX Group. We will kick off today's webinar with the market highlights by Mr. Geoff Howie, market strategist at SGX Group, followed by a corporate presentation by Marco Polo Marine Management and CEO, Mr. Sean Lee. Marco Polo Marine Ltd, listed on SGX since 2007, specialized in marine logistics, focusing on shipping and shipyard operations. They list vessels like offshore supply vessels and tugboats for industry, including oil and gas, mining, construction across regional waters. Their shipyard in Batam, Indonesia, spans 34 hectares with 3 dry docks catering to medium-sized and advanced vessels projects. They have also expanded into supporting offshore wind farm projects in Asia. So first, let's welcome Mr. Geoff Howie to share with us the latest markets highlight. Over to you, Geoff.
Thanks so much, Sunny. Bear with me while I share the screen. And presto. Thanks very much. I'll take 10 minutes providing just a quick educational overview of where we are at the moment in our stock market. Since the end of 2019, the STI has generated a 22% total return in US dollar terms. As you can see, that has more or less kept pace with the regional APAC benchmarks and the Asia ex-Japan index as well. For the month of April, we did see some turn in institutional flows into the market. We booked around 225 million Singapore dollars of net institutional inflow. That brought the year-to-date net outflow to around 970 million. So it reduced the amount of outflow we've seen year-to-date. Over the month, UOB led the net institutional inflow. Then it was DBS and OCBC. So quite clearly the banks on the outlook for longer high interest rates in the United States. We also saw Yangtze Jiang Shipbuilding, Comfort Delgro, Sembcorp Industries, Cetrium, Jardine Cycle and Carriage, Gunting Singapore, and Thai Beverage. Those that made up the 10 stocks that booked the most net institutional inflow for the month. And obviously that meant that banks and consumer cyclicals and utilities led the inflows for most of the month. The stock that we're all here to hear more about tonight, this is interesting, Marco Polo Marine, while it has around 255 Singapore million dollars in market cap, it has ranked among the 20 stocks that have booked the most net institutional inflow so far this year, and also ranks among our 80 stocks that book the most trading turnover on a day-to-day basis. Looking at retail flows now, not institutional flows, through each of the past 4 years, retail investors have been net buyers of Singapore stocks with net retail inflow or net buying close to 15 billion Singapore dollars. And the revealed preferences of this net retail flow, what it does is showed us that retail investors have been overall more active buyers in the Singapore companies and Singapore stocks and the STI when we underperform the peers as opposed to times of comparative outperformance. So for instance, if you look so far this year, right, you've got Singapore sectors that have attracted the most retail inflow have included the 2 real estate sectors, the developers plus the REITs, as well as the 2 consumer sectors, the cyclicals as well as the staples. Both haven't performed in line with the stronger sectors. If you want to look at it at an individual stocks, you can see those stocks that have attracted the highest net retail buying relative to their proportionate market cap. So not just looking at the big stocks, but taking the actual net buying and dividing it by the size of all the stocks that we've got. So you've got like a more proportionate comparison. Stocks such as Nam Cheong, AEM, Capital Pacific Oak, US REIT, it's Nanofilm, Yoma, CapitaLand China Trust, Rex, Zhejiang Chemical, CSE Global, and Mapletree Logistics Trust. They're the 10 stocks that have seen the most net retail buying proportionate to market capitalization of each respective stock. And those 10 have also generated median declines of around 24% so far this year. I think as to the close yesterday, CSE Global was the only one of the 10 that was flat on the year. Okay, so that's kind of from a flow perspective what's happening. But what's really important, I guess, wanted to just take 3-4 minutes quickly on the economics, because it's always a very important month in April, because you get the OECD outlooks, you get the IMF outlooks. We've seen that what's happened in the first quarter of the year, and we get a much better gauge on economic developments as they're supposed to occur for the remainder of the year. It's always a much better time at this year to make an outlook for 2024 than it is in December of last year. There are 5 key things or takeaways in terms of global challenges, and you'll see these thread through a lot of corporate outlooks as well throughout the year. The first is that the world has not yet fully controlled inflation, and therefore you have rising real interest rates. Basic modeling going into this year, it always showed a risk that the Fed's preferred gauge on inflation, the PCE core deflator, could level out sub 3%, not keep moving at that downward gradient towards 2%. And that's what it has effectively done for the first 3 months of the year. So that means what we've seen over the last 4 and a bit months is that expectations for Fed fund rate cuts in the first half have declined from expectations at 100% going into this year to less than 10% right now. So what we need to see is corporations, they need to see productivity to offset tight labor markets and services inflation. And then the broader globe, as well as all the corporations, obviously does not want any food or energy price shocks, therefore exacerbating real interest rates. Economic divergence among countries is a big thing at the moment, because the US is performing really strongly and the significant contributor at the moment to global growth. It's driven obviously by robust demand, but it's also been driven by expansionary fiscal policy. And there's concerns in the fiscal monitoring, particularly by the IMF, that their approach for the fiscal expansion, while it is heralding results now, is not really aligned with long-term fiscal sustainability, and that can complicate their disinflation process this year. And it also poses risks, obviously, to fiscal and financial stability across the world. And it's also creating stresses, the higher interest rates in the US and the growth on global currency markets, because the US dollar has been strong. About 90% of global payments, about 60% of global official reserves are denominated in US dollars. So this divergence among countries is important, particularly when you look at the next biggest country, which is the China economy. That's being affected by its enduring downturn in the property market, which is not obviously expected to turn until, I think, 2026. Quickly, the third is the less favorable debt dynamics for emerging markets. As maintained by my good friend who runs Landforce Strategy, emerging markets face significant challenges in high interest rates, strong US dollar environments, and therefore the cost of servicing that dollar-denominated debt, it can obviously lead to capital outflows and financial instability. So that can put more borrowing costs on the rise. Additionally, the borrowing costs can also rise, and that puts excess pressure. So that might compel emerging markets to raise their own interest rates to keep attracting foreign investment, as we've seen in, I think, October last year and April this year for our neighbor Indonesia. There's also historically weak medium-term growth prospects, and this is on the lack of productivity growth. Productivity growth's been good in the US, but not so good in the rest of the world, and that's why, you know, when you look at long-term trends like 2006 right through to 2015, global growth was around 3.7% on average. But when we look forward from where we are now, global growth is expected to be around 3.2% this year and next year, and then converge to around 3.1% towards 2030. So expected to have less growth. Obviously, slowdown in productivity growth, as I said, is one thing, but also the rise in economic fragmentation and protectionist policies is always threatening medium-term growth as well. And the fifth key thing, significant investments obviously needed for green and climate resilient future. That's the next big, the fifth big global challenge. Obviously, alternative energy sources, solar and wind and hydro is important. And I think Sean will share a little bit more on what Marco Polo Marine subsidiary PKR Offshore is up to in supporting Siemens Gamesa wind projects in both Taiwan and Korea. But these are all pretty much relatively fluid drivers as well. When you're throwing in inflation, you're throwing in growth forecasts, as well as looking at debt levels and trade, and the big sustainability and digitalization mega themes. It's obviously a really fluid market outlook, and that doesn't even touch on geopolitics. Geopolitical concerns, they obviously are a mainstay in our market. It's been that way for a long, long time. And it's also evident in the gold price. As I said, the STI is up 22% US dollar terms, but the gold ETF has doubled those returns, if you will, up near close to 50% since the end of 2019. Very quickly, just to share some highlights. You don't get to say this every day, but the STI on a total return basis, when you assume that dividends are reinvested, is currently at an all-time high, according to Bloomberg. I'm not sure what the number is today, but there's a chance it might have surpassed the 6,000 mark, this index, for the first time ever today, and I'll be able to check that tomorrow. But it was very close. It was I think about 59.90 when I left the office earlier to come home to present tonight. Look, dividends are a super important part of the branding of our market. We had 50 stocks go ex-dividend last week. We've got another 70 going ex-dividend this week, because so many companies do finish their FYs at the end of the calendar year. And the banks alone, they make up 50% of the STI and paid 11.5 billion Singapore dollars in dividends alone last year for the FY23, I should say. So that has seen the STI generate an annualized total return of 4.8% Singapore dollar terms since the end of 2019. Investors that did not go lump sum at the end of 2019, but decided to go a little bit more safer and spread the investment over the end of every single month up till now. That's about, how many months is it? It's close to 60 months, thereabouts. So you would have started investing $1,000 at the end of December 2019 and purchased, close to 19,000 units, over 52 months, right through to the end of April. So that means you would have averaged buying the STI ETF at a price of $3.11. It's up at around $3.30 at the moment, and you would have made about 85% of what you would have achieved had you gone lump sum at the end of 2019. So there was one point I wanted to bring out. There's dollar cost averaging. You do have enough volatility in the underlying index to see that there are instances like in October 2020 where the units were around $2.46, and you could end up, your $1,000 would buy over 400 units. And then when they were at a high in July 2023, of around $3.45, you would have ended up buying much less units, only 290 units. So that's about 40% less than you bought at the major lows. And that's just a quick wrap on what we've got in terms of highlights and recent, from an economic perspective, from a flow perspective, and also sharing just how important, again, dividends are in our stock market. So if you would like any more information, of course, and more reports and more bandwidth on what we've got, there's this QR code for you to scan as well. All right, I'll finish now and stop screening. Thank you very much, Sunny.
Okay, thank you, Geoff, for that insightful sharing on the latest market updates with us. We will now dive into the corporate presentation by Marco Polo Marine, and I would like to invite Mr. Sean Lee, CEO of Marco Polo Marine. Over to you, Sean.
Well, thank you very much, Sunny. Thank you for having me here. Let me just start with the presentations. That was an interesting talk, Geoff, by the way. So Marco Polo Marine, we are listed since 2007. So basically, this is the market cap currently is about $255 million. The major shareholders is my family, basically Lee family, 22.6%, and Apricot's holdings about 16.4%. So Penguin's holding about 8.1% of the company at the moment, with free float about 51%. So basically, Marco Polo Marine has two main businesses. We have the ship charterings and also the shipyard business. So the shipyard, we are one of the largest shipyard in Indonesia with 34.8 hectares land. We do shipbuilding, conversions, outfittings, offshore fabrications, lots of ship repairs and maintenance. Basically, we have repaired more than thousands of different kinds of vessels over the past 10 years. And for the ship repair business, actually a cash cow. Basically, it's a recurring business. Shipbuilding is a little bit more lumpy, so depending on what kinds of season we are in. But we used to build lots of offshore vessels. Basically, if you're talking about ship chartering side, basically we own a fleet of vessels, or mainly offshore vessels, and serving predominantly the offshore oil and gas and also the offshore wind farm in recent years. So we also operate tugboats barges as well to carry all the mining products basically, and we do have another company that we own, which is also listed in Indonesian exchange as well. This is under PTBBR. Yep. Next page. So this is just the shipyard operations. We have currently 3 dry docks. The first dry dock is 240 meters, and then the second is 175. Then dry dock 3 is about 220 meters. If you know, this kind of size, we can mostly take in medium-sized vessels. For example, if it's talking about tanker, it will be MR sizes. If you're talking about containers, about 3,000 TEUs kind of sizes. Next. So because the utilizations of the dry dock is actually kind of high, so we are at the moment, also we announced this as well, we are in the midst of planning for the dry dock 4, which is in progress at this moment. This will be at 214 meters in terms of length. Yep. So in terms of the track records, I mean, as I mentioned just now, we built lots of offshore vessels in the past. So that's our forte. We do lots of repairs and maintenance, all sorts of repairs and maintenance, mainly merchant vessels because there's more volumes there. And we do lots of conversions and outfittings as well. Yep. So in terms of, I did mention about the wind sectors, which is something very, very interesting right now. So across the wind sectors, wind value chain, we don't own all kinds of all the vessels, but we certainly focus on the few types, like for example, the barges, the anchor handlers, the PSV, the walk-to-work vessels, the SOV, CSOV, and also the CTV. Next. So in terms of our capabilities of the offshore side, basically we do lots of anchor handling, work-to-work accommodations, ROV surveys, salvation operations, search and rescues. And if you look at the pictures over there in the left-hand corner, basically that's the vessels working in Taiwan, pulling some of the monopiles for the construction to the wind farm in Taiwan. Yep. So in terms of customer base, so I mean, in the shipyard side, as you can see, we focus lots of shipping companies, basically like PIL is actually one of our core customers. Of course, we do lots of repairs and maintenance for dredging companies as well, like Yandenor, Venord. For the chartering side, okay, we divide the center part is actually more focused on the wind side. For example, customers like WPD, Ørsted, CIP, Hitachi, Siemens Gamesa, we have Vestas. So basically, we serve the developers, the EPC, and also the turbine guys as well. For the ship charterings, in terms of the offshore oil and gas, of course, we've been serving all the NOCs. We've been serving all the basically all the oil majors, the Shells and all that. Yeah. So yeah, so we've been focusing a lot on the wind recently because there's a huge growth in terms of the wind market, as you can see around the world today. Everybody's talking about the offshore wind and a huge growth in these sectors. Let me just, maybe next page, let me show you a little bit on the information. For example, right, In Europe, European Union, they're trying to build like 300 gigawatts by 2050. China has got huge ambitions of building up to 1,000 gigawatts by 2050. UK is trying to do 50 gigawatts by 2030. Of course, Taiwan, Korea, and Japan market is something that's Marco Polo's focus. For example, Taiwan at the moment, they just completed 5.5, that they are trying to build 20.5 by 2035. And of course, the number is going to be growing as well because it is actually a proven thing for Taiwan. So the next will be Korean market. Korean market at this moment, project pipeline is up to 16.5 gigawatts. I think that number is also growing. Japan has a big ambitions of growing up to 45 gigawatt by 2040 as well. Vietnam is also another very interesting market. They recently, actually last year, they have just they got their permits and everything. But I think this is something that they're going to grow into quite a big one with 70 up to 91 gigawatts by 2050. Even Philippines is also coming up as well with 40 gigawatts. So the market is huge. I mean, Marco Polo has actually been focusing a lot more on the Asian market because the Europe side itself is huge, but there's a lot of players out there already. So in Asia itself, there are not many players. So Marco Polo is actually one of the leading one in the sectors. Yep. Serving the offshore wind farm. So in offshore wind farm itself, it's got it's got this life cycle as well. From the conceptualizing, the development engineering to construction commissioning. That's where you need a lot of different kinds of vessels from CSOV, which is what we are currently constructing in the yard today. The vessel is going to be delivered by this year, end of this year, basically. So the CSOV, the feeder vessels, for example, anchor handlers, which is actually predominantly in the past been serving only the oil and gas sectors, today is also serving the wind sectors, and also the CTV and all that. So, like for example, big items like WTIV or crane barge or heavy lifts is something that we don't do. But later part after the constructions, then we move to the operation and maintenance stage. That's when you need a lot of SOV and then CTV kind of vessel, which is something that Marco Polo will be focusing in, because that kind of work will require like 10, 15 years kind of contract or even longer. Yep. So let's focus on the CSOV, for example, CSOV and SOV market, which is something that we've been very, very focusing in. Today, there's only 31 units in the world, in the whole world. There are only 31 units. So there are about 53 under construction today. So out of the 31 units, there are only one unit actually working in Asia. So the rest is actually working in Europe at the moment. So you see there's a huge potential there because in the world today, they actually need a lot more units to support the whole constructions and also the O&M, operation and maintenance for the wind farm sectors. So, I mean, we've done a lot of studies on that. We know exactly who they are, who owns what, where they're operating, what kind of rates they're having. So this is just the snapshots of the CSOV, SOV operating companies in the world today. Next. And of course, this is just a comparison of what are CSOV, what are SOVs. SOVs are normally, they do get 10, 15 years contract for the operation maintenance. CSOV, which is what we're constructing today, a shorter contract, but they are giving you a higher pricing with the better margins. Yeah, this is a little bit technical, sorry. And yeah, so the world today needs a lot of vessels. We're talking about what 80 vessels, and we're talking about close to 150 will be needed very, very soon around the world as well, as CSOV and SOV combined. Sorry. Yeah. This is just dollars today. It's actually moved to $50 over $1,000. In fact, the swap rates has gone up to $70, even $80,000 per day. So there's a huge growth. The reason because there's a lot of projects going around, but I think there's not enough vessels around to serve this industry today because the wind sector is actually a nascent stage. So there's not a lot available in the market. There's not much constructions as well because, for example, CSOV, they don't give you long-term contracts, unfortunately. But the thing is, the utilization rate is actually today is about 90%. So this is something quite interesting to look at. Yeah, next. So this is our CSOB under construction in the yard today. Will be delivered to this year. Basically, it's going to be going to Taiwan for Vestas. It is with 3D motion compensated, very high-end vessels. You can see there's even cinema and everything inside the vessels. Actually quite luxurious. And this is actually the state of art with battery hybrid, lithium-ion battery hybrid that powered. And also, this is a very green ship, basically. Yep, some of the technical details: 110 men, 83 meters. So Marco Polo, what sets us very different from the rest of the players is the fact that we are the only companies in the world today with the ability to design, build, own, and operate. Because even if you look at those European players today, right, they are the owners and operator, but they don't build the vessels, right? Either they are the builder, the designer, or you're the builder, or you are just the owner and operator. So you'll never be the designer, builder, or owners and operators. So in terms of this kind of one-stop shop, I think Marco Polo is the only player in the world today that has this kind of setup. So that sets us very apart from the rest of the players in the market. Yep. So recent highlights, basically, if you look at the last year, the net profits has jumped quite a bit. I mean, the second half, we have net profit has jumped about 47.4%. To 17.1. I think over the years, we have performed quite okay in full years. For example, EBITDA of $43.3 million. So in terms of we're net cash positions at this moment. Well, this is actually last year's as at 30th September, we were having about $60.8 million in cash, net cash, basically. Yeah. So there's a lot of charterings growth potential in Taiwan offshore projects. Other than, of course, the oil and gas activity is actually getting very busy at this moment. But yes, and also the fact that the shipyard is actually having high utilizations. As well as there's a steady progress in terms of what we have at this moment with the CSOB constructions. Yeah. Again, this is just a revenue growth of the first quarter of 2024. There's a bit of a jump from last year's same quarter comparison. There's a jump of 22.8%. The gross profit has jumped about 75.8% as well to 11.6 this first quarter. This is because of the high utilizations and also the high charter rates as well. Yep. That's the first quarter, basically. Yep. So in terms of ship charterings, I think there is we do see that there's a steady demand for the offshore vessels. As you know, the offshore oil and gas sectors actually is quite busy at this moment. The thing is, the interesting part is the fact that the same sets of vessels used to only serve one sector, which is the oil and gas, right? Today, the same pool of vessels actually serving two sectors, the oil and gas and also the offshore wind farm. So there's no new vessels coming into the market, unfortunately. Unfortunately for us, and that's the reason why the demand is going higher. But the thing is, the supply is actually maintaining or in fact declining because some of the vessels actually being scrapped over the years as well. So that's actually interesting economics here. You can see supply and demand situations. So the charter is hence is actually growing slowly, and utilization is also going up because the fact that they are talking about two different activities actually needing the kind of vessels. Yep. Next. Okay, the shipyard side has actually been the repair business actually it was softer for a while when the charter yard reopens, but I think it's actually coming back again. That's actually quite promising. I think the ship building sector is actually coming back as well. So there will be some activities coming up in terms of shipbuilding over the next few years. I think, especially for offshore vessels. If you look at Marco Polo, all the while has been building a lot of offshore vessels, right? And there are not many yachts in the world today that can actually build offshore vessels. If you look at Yangtze-Jiang, for example, they don't build offshore vessels. They build a lot of merchant vessels. So in terms of specialized vessels, there are not many. In fact, a handful around the world today that actually build the offshore kind of vessels. So it'll be very interesting to see what's going to happen over the next few years in terms of the new building sites. Yep. Again, the outlook, I do see that ship chartering is going to be quite interesting to see. There's a higher utilization, also the increasing charter rates as well in the market. Also the shipyard, as you can see that we are also growing. We are building the 4th dry dock coming up. So that will increase our capacity as well. So that gives us a bit of a growth potentials as well in that sense. Yeah, this is just a steady market value increase over time. You can see the market cap is also growing at the same time as well with our EBITDA. Yeah. Again, there's still I would always say the company is actually having still attractive valuation still, because we do have a big growth and we are still in a strong net cash positions. I think there's a lot of value in the company is actually not unlocked. For example, the yard itself and all that during the restructuring, we did a huge impairment and all that. So there's a lot of values in the company that's actually not really is unlocked. So there's a huge potential, especially for example the subsidiary that we have in Taiwan, for example, the PKRO, which we are growing very, very rapidly in terms of the focusing in terms of the offshore wind farm sectors itself. Not just Taiwan, but also the Korean and also Japan market is something that's actually very promising. Yep. Yep. Some of the consensus in terms of analysts, the target price is between 0.81 to as low as 0.81 from RHB to as high as 0.88 from Maybank. So at this moment, I think we're trading at 0.06869. Yeah. Thank you very much. Q&A.
Hey, thank you, Mr. Sean Lee, for that very detailed and insightful sharing. I didn't know that operational vessels do have that luxury and cinema inside them as well. So something new that we learned today. We will now move on.
What you didn't know, there's karaoke room there as well, and gym as well.
Interesting. I think we should organize an analyst visit someday over there. Okay, we will now move on to the Q&A segment. So please feel free to submit the questions in the Q&A chat box. For our Mumu Live audience, do click on the link to join us in Zoom if you would like to post your question as well. We will try to answer as many of the questions as possible. So let's move on to the Q&A session now, Mr. Sean Lee. I look at, this is my question first. I'm looking at the strong financial performance in FY 2023 with record EBITDA and net profit, which you mentioned earlier. So would you be able to elaborate a little bit further, which are the key drivers that push this record EBITDA and net profit in the business?
Yeah, so basically in 2023, the charter rates for the offshore sector is actually going up quite a bit. I mean, we're talking about traditionally it was like in the slump, for example, from 80 cents per horsepower, 90 cents to $1 to $1.20. I think there's a jump there in terms of charter rates and also utilization. We are able to maintain up to 70 to 80% utilization as well. These are the main drivers, right? For example, if you can actually push the utilization up a bit more, then there goes translate to the bottom line as well. And also, if you look at the charter rates today, even $1.20, $1.30, even $1.50 is not the highest, because during the peak, it was at $2.50. Of course, we are not going there yet, right? So, but there's still a huge potential into the growth, right? Because of because the demand is there, but the supply is actually not 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 a lot today. Of course, the repair business was actually quite steady last year as well. I think that we were able to penetrate into more than merchant vessels, not just offshore vessels, but of course we penetrate more into the tankers, containers, and also the bulkers market as well. So we were able to push the utilization rates higher for last year. And that's the reason why we were performing better as well in 2023.
Thanks for that answer. I think I'm looking at the financials that you mentioned earlier. So bulk of the revenue was still generated by the ship repair and the ship chartering business. We also have the wind farm business as well. What is the percentage like in terms of revenue and profit with these two business segments?
So if you're talking about offshore and shipyard, I'll be about revenue in terms of revenue contribution about 50-50.
50-50.
In terms of the offshore side, it's actually growing from, I think, as low, it was actually about 20%, if I'm not wrong, in 2023. But I think that number is actually slowly growing as well. With the new CSOB coming on stream, I think the whole percentage contribution will be kind of different. I'm talking about next year, of course, yeah, because it's obvious because it's already in the market. It's public information anyway, so.
Yes, so the strong performance, I could still see that the different key pillars in the business is still growing in each of the different segments as well. So talking about this financial performance, is there any economic issues that you foresee that will be something of a challenging issue that Marco Polo Marine will face? For example, the inflation situation right now, the interest rate, or even geopolitical issues that's happening. Will that have any impact on Marco Polo business?
Yeah, so basically interest rates high, meaning that people are more reluctant in terms of shipbuilding, right? Constructions of ship new build, all that also will be an issue. And but having said that, right, because of the high interest rates and all that, people are reluctant to build offshore vessels as well at the same time, right? Meaning that there won't be a lot of the new competitors coming to the market because the charter rates are not so high enough that, and also the interest rate is so high at the end of the day, it's not so, still not sexy enough for them to come into the market in terms of know that there's no real supply to the thing. Yeah, so, but if you're talking about race in terms of geopolitical, I think, that we are operating in Taiwan, geopolitical risk is always there. China and Taiwan market, Taiwan relationship has been tricky, but I think it sort of stabilized a bit, I think, but it doesn't really hurt us at all in terms of that. So the wind farm project is still ongoing and it's actually going strong. So yeah, we're crossing fingers, hopefully nothing happens, but nobody can tell when, if there's any war, but there's always a risk there. Yeah.
Okay, glad to hear that the operations or the zones that we are working on is in Asia, so it's pretty safe compared to the Middle East area where things fluctuate very fast and change very fast. So we have questions streaming in from the Q&A box already. So I'm just going to go through the Q&A section. First question is from Long Wei Zi, I think that's the name if I get it correctly. Marco Polo Marine signed at least 2 MOU last year. They gave an update on what were the realized deals. Can you give an update on what are the realized deals from the MOU side? And also going forward, are you looking at more MOU signing and working on the existing MOU?
We signed quite a few MOUs. Which one are we referring to? Are you referring to the MOU that we have with K-Line, for example, the one that we have for Japan market? I think that's actually ongoing. We are looking at potential projects together already, so we'll give more updates on that when it comes. The Korean side, we are also entering into something in Korean market, which we also signed that we are entering into with the CTV market in Korea side as well. That's already ongoing. What else? Emoji, the ammonia is okay. Now Emoji is actually still testing the system in vessels right now. So we're still waiting for some results on that. It's actually kind of interesting technology that we are looking at. So everything's actually ongoing at this stage. Yeah.
Hey, thanks for that answer. So besides the existing MOU, we are also working towards more MOU signings in the coming few quarters.
Yeah. It will just translate. For example, MOU with Vestas is already translating into contracts, right? So yeah.
Okay, looking forward to that development as you update us along the way
Thank you.
in the market updates. So he has a subsequent question. How long can the OSV last? Based on the age of the current fleet, 7 to 16 years fleet age, how long is the runway for the usage of the OSV? What happens to this OSV after they retired? And then the plans to build new ones. Can share a bit more about the OSV usage?
Okay, so basically the age of vessels for OSVs are normally up to 25 years, basically. I think some players even stretch the age up to 30 years. So the end of the age for these vessels, Marco Polo used to have these replacement policies, right? We always build new vessels to replace the older one. We haven't got into that mood yet, but definitely something that we're always looking at. So the end of the life of the vessel, normally vessels go for scrap lah. So we don't say scrap nowadays. We say green ship recycling. So this is what we do as well. So yep.
Okay, thanks for sharing with us on what happens to the fleet and what is the age of the fleet looking like. So that will help us understand how the business work and how the rebuilding will start as the ship age. We have a next question from another audience. What is the earning visibility for the years to come?
Oh, very sensitive.
Yeah, or just a very
I-
vague range on revenue forecast or profit forecast,
I
or
think
how
we
the
are,
industry as a whole or sector as a whole.
yeah, we are in a blackout period at this moment, unfortunately. Yeah, we can't share much of it, but I can share with you in terms of how the whole industry is going, right? Since we are in offshore sectors, of course, the offshore sectors itself are still quite promising in terms of the oil and gas side. I think there's a demand is still quite strong. Charter rates is slowly moving up. Of course, the spot charter rates has gone up crazy, but I always don't look at it. A lot of people are sending me these reports on how the spot charter rates has gone up crazy, but don't look at it that way. But I mean, but it is showing the sign that it's actually growing in terms of charter rates, so that is beneficial for us. So in terms of the yard development, as I mentioned just now, I think there is a huge demand coming up in terms because the offshore vessels is actually being underbuilt for over the years, right? So there will be such demand coming in, not very quickly, but I think slowly because interest rates is still kind of high at this stage. The offshore wind farm sectors is something that we are seeing very interesting. We are building, we are getting tractions, we are getting contracts. So this is something that I thought that would be a driving growth for the company. So I think I can only share the industrial outlook so far. But of course, if you ask me, I can share with you a little bit more when the results are out very soon. So, yeah.
Okay, we'll look forward to those results. I believe it's going to be a very positive results with the positive outlook that the sector is looking at right now. So I hope that answer Lim Yi Kun's questions. We will move on to the next question by I believe it's Mr. Victor. Thank you for the great presentation and congratulations on the amazing turnaround in operations over the last decade for Marco Polo Marine. Under Mr. Sean Lee leadership, the share price has done well in absolute terms. I think this year, the last that I looked this afternoon was up like 40%. But it seems to have lagged a bit compared to the US listed peers like TDW. So are there big differences in your business model compared with TDW?
Oh, yes. Tidewater, you mean. Of course, they have a bigger fleet of vessels, number one. And number two, Tidewater has always been focusing more on the offshore oil and gas sectors. So I don't think they are focusing anything to do to the wind side yet. So in terms of the market segments, is slightly different. Of course, they are a much bigger company. They have a larger fleet, of course. We focus a lot more. We split our business segment from oil and gas and also the offshore wind farm. But we put a lot more focus on the offshore wind farm, the renewables, than the oil and gas. The reason is because the oil and gas is very cyclical. You know, Marco Polo at one stage almost gone down very badly. We were lucky enough to be able to save the company and turn it around. Let's not go back there again because it's actually very cyclical, right? So that's why I'm finding the more safer industry to be in. For example, this wind sector is actually it's non-cyclical, right? It's once you have a project, you just have to finish it. Once you finish it, you start operating. You have to do operation and maintenance for longer term. Yes, it does not give you that kind of margin, that kind of a huge, upsides that the offshore oil and gas does give you, but it gives you a lot more stable, income and outlook.
That's very comforting to know that we have more stability right now compared to in the past. But just to add on to these questions, when we are comparing with peers of Marco Polo Marine, who do you view in the region as your key competitors, and how do you feel about the competition in the region right now with Marco Polo, your key competitors?
Yeah, our key competitors nowadays, they are not listed. They're not really listed. So, you have Porsche, you have ENA. In Taiwan, you have Dongfang, which is going to be listed soon. So ASL, in terms of ASL, is actually very focusing on the shipyard side. We're half and half. So there is, all the peers that we used to compete against, they're no longer around. But of course, there's Mermaid as well. I think Mermaid Australia. That is something that's actually quite interesting. They are slightly bigger fleet than us. So the difference is that we have a shipyard and they don't. So that's the only difference. Yeah, if you compare real peer to peer, 100% the same kind of business model, I don't see any. Yeah, they're close. They're close, but they're not exactly the same. Yeah.
So how do you see the differentiation between Marco Polo and the competitors? I mean, you have the 50-50 business and the wind farm project.
So basically, as I mentioned, if you look at wind farm sectors per se, we are the only one in the world today to have the ability to design, build, own and operate vessels. Right. So that sets us very, very much apart from the rest of the players. In terms of shipyard side, we are focusing a lot of repairs in medium-sized kind of vessels rather than a bigger size. We don't compete like C-trims, or getting all the big vessels. Yangzijiang only focus a lot, for example, big vessels, right? They don't look at offshore vessels, not specialized vessels. Pax Ocean, which is actually under the same group as a port group under the Porsche, that they're not listed. So I don't know how to share much of this information.
Okay, thanks for the answer. I think it's very insightful as well. I for one is supporting of the wind farm and the ESG, especially with the heat wave going through Asia right now. We hope that the climate will get better with this ESG initiative and ESG business that Marco Polo is doing. That will answer Mr. Victor's questions quite detailed. And we move on to the next questions by Longweizer again. Noted the huge potential market size. Does Marco Polo Marine has the capacity and resources to capture this market?
Yeah, so it's very, very, very good questions. I think we are in a very capital-intensive industry, meaning that we always have to build to increase the capacity. For example, the offshore fleet, each vessels, they are not cheap. Of course, the CTV, they can be as low as $5 million, but the bigger ticket item, for example, the CSOV costs about $60-70 million. So the only way to do this is actually to see how to tap on financing, for example, and how to grow. There's a lot of instrument in the market as well, and there are some plans for the company to see how to capitalize this part. I think we'll share a little bit more coming up soon. there's, there's a lot of things I wanted to share, but this is not the right time for me to talk about it. But very good question. Definitely, we are capital intensive kind of industry. We have to find ways to sort of support that kind of growth. Yeah,
we totally understand that. Yeah,
definitely, there's a way to do it. Yeah.
Yep. Maybe we look forward to another corporate connect session once the results are out, and these questions can be answered directly point blank. He has a subsequent questions referring to the wind farm potential market size. I also saw the size that you listed down by each of the countries earlier on. So do we have is there a very big demand right now and that the supply cannot fulfill? And does Marco Polo Marine has the resources to take out the bulk of this demand that is that's out in the market right now to build the wind farms?
Wow. Okay. Taiwan market, I think is kind of interesting. I mean, the huge demands over Taiwan, Japan, and Korea. I think Korean market is the next one that's going to come up, but they take time. It will take time. We have the resources to build all these vessels. I mean, CDVs, we can build a few more, but CSOV, for example, we are building one right now. I think, of course, we have the ambition to build more. We have to have a fleet of these kind of vessels, or else it doesn't make sense. So again, I would love to answer the questions. But the thing is, the good news that we have announced recently that we managed to secure bank financing in Taiwan, for example, that gives us an avenue for us to be able to raise funds, for us to be able to tap on this to grow the fleet. More to come, I think. So stay tuned. We will give a lot more updates on this. But it's good news, right? The fact that we are able to secure financing and the interest rates are kind of very, very attractive. So we'll manage that.
All right. So Wei Zi, stay tuned. That's the key message that Mr. Sean Lee is telling you. Look out for the financial results that will be coming out soon. The next question from Mr. Zen Lim would like to thank Mr. Sean Lee for sharing the comprehensive survey of the addressable market on SOV, CSOV till 2030 and 2050. So what would likely be the market size the company may command in 2030? Or is there any projection or targets that we are working on?
Wow. This is a forward-looking statement now.
2030 is quite far out, yes.
Yes. Okay. First of all, there's no way Marco Polo can only operate one vessel. I'm talking about the CSOV. There must be a fleet of them at the end of the day. And the market is big enough to consume, it's not so much whether or not the market can consume. It's how much can we grow because these are capital intensive. One unit of this item is like the $70 million US now. I mean, when we built it was 60, now it's 70. So it really depends again how we are able to continue to fundraise, to tap on available resources. Again, I would love to answer this question. It's actually quite similar. Yeah, but the market definitely can consume it because, for example, we're talking about demand for CSOV, SOV in combinations, right? In over the next until 2035 will be more than 150 over units. Today, we're talking about struggling 70, 80 units, 30 over units in operation, 50 over units under constructions. And the growth stage is not like in the past where people, when you ask from the bank for money, right, the bank was just gladly giving it to you, right? Today, you want to borrow money, it's actually very difficult, and the interest rate is also very high. So, and that's the reason why the supply in the market doesn't grow so fast. It grows very slowly, and one or two units kind of growth, It is, yeah. So although people are saying that, oh, but this is renewable related and things like, the banks are still kind of conservative in that sense.
Okay, hearing that answer, I believe Marco Polo I get a gut feel, is also conservatively confident on grabbing the growth in the market size going forward towards 2030, right?
We hope so.
Okay, I hope that will answer Mr. Zen Lim's question. And the next one would be from Miss Jennifer. Is Resource Global Development Limited your competitor in Indonesia? In terms of shipping logistics, they are increasing the tugboat and barges to serve the Indonesian market. Will Marco Polo follow suit? Resource Global
Yeah,
Development. Yep.
so basically, tugs and barges business is something that we are not too keen to expand, to be honest. We were from that sectors in the past. We were kind of one of the bigger players in the past as well. But we realized that this sectors is very cyclical, just like the oil and gas sectors. And also the hurdle rates, not the hurdle rates, so the entrance to this, the hurdle to enter this industry is actually very low. So meaning that any mums and pops can just, have $2-3 million, they can set up a tax and barges operation company. So so because of that, and also operationally, they can be very, very tricky as well. So yeah, tax and barges, believe me or not. We've been there, done that. So will we grow into these sectors? The answer is no, we will not. We will be putting all the much of our resources into something that we think is actually a higher hurdle to enter, and so more technical and more sophisticated, so that the competitors are more manageable as well. Yeah.
Hey, thanks for that answer. So yeah, something with a higher barrier of entry so that there'll be less competitor for Marco Polo to operate in. Okay, thank you for the answer, Mr. Sean Lee. And we move on to the next question by Mr. Lim Che Xiong, I believe, if I get the name correctly. What is Marco Polo Marine appetite on taking more debt for expansion? And would Marco Polo strive to build the net cash war chest and spend just within their means?
Yeah, so there must be a time where we will leverage to a certain level. We will not be over leverage ourselves as well. I mean, no matter what it is, we were there before. We do not want to go back there again. So meaning that we always kept our leverage, and do as much as we can and stretch every dollar that we can. So in terms of over leveraging, like what a lot of people did in the past, we will not repeat the same mistakes. Yeah.
Okay.
So again, the many ways of raising funds. Yeah, but not over leveraging ourselves. Yeah, that's for sure.
Sure. So with that experience, I believe we are keeping a close watch on the debt levels and not to over stretch ourselves. So we are doing, Marco Polo is trying to do things within the means of the business. That will answer Mr. Lim Che Xiong's questions. Mr. Victor has another question. Sounds like the business should generate tremendous FCF, I mean cash flow, over the next few years. Will that be allocated between CapEx and shareholder returns? Given the strong balance sheet, would you consider a share buyback? Any plans for that? How cheap the share price is currently trading at?
Yeah, so share buyback is something that we are not considering at this moment. Having said that, because we were in a very capital intensive industries. So people are saying that, oh, do you have a dividend policy, for example? Are you gonna give returns in terms of dividend? To be honest, just like you as a shareholders, I'm the largest shareholders. I would love to have dividends, to be honest. But the thing is, I'm also wearing the management hat as well, right? So I have to make sure that we know that there's a potential for the growth of the company. How do I make sure that we are managing this right, in terms of the growth versus the investors, shareholders return at the same time? We don't have a dividend policy, but we're hoping to be able to maintain certain dividends as as a means lah. We are trying to manage this. Yeah.
Okay, thank you for that answer. We are at 7:59 now, so 1 minute to 8 p.m. We have still 2 more questions, I believe. So the time will be just right. The next question from R. Huang, what and how do steel and other input costs is it critical to shipbuilding? Raw material costs, I believe they are referring to. Is there any pressure on that, and how do you foresee that in the business, the increase in raw material costs?
Yeah, so raw material. So the first place we don't do speculation build lah. So at the end of the day, the material cost in terms of the steel side. Okay, offshore vessel steel is actually not the biggest part of the whole thing. In fact, the equipments are. So the equipment prices actually do go up. At the end of the day, we are able to pass this to the customers, because we don't speculate build. So basically, before that, we already, when we were gonna build this whole thing, we already have all these hedge. So we shouldn't have any exposures in that. But when in terms of if the vessels prices actually gone up because equipment prices actually gone up, then at the end of the day that will translate to a higher charter rates as well, eventually. So yeah, the clients are acknowledging that the fact that the cost of the vessels are more expensive today.
Thank you for that question. So we have passed 8 o'clock. I think the next few questions I'll just go through very quickly. One of them from Zilong is just to thank you for this evening session. Very informal, and appreciate Mr. Lee's time for sharing. And please do arrange another session with us once the results are out, so we can update all your investors and the shareholders out there. The next one by Mr. Victor. Could you kindly share your thoughts on the valuation paid for the takeover of your competitor MMA Offshore by Cyanide Renewable? Just a quick 1 or 2 liner answer.
What's my thoughts on that?
Valuation paid for the takeover, MMA Offshore.
I think the price is the share price is going up, right? I think SIAS is also struggling on that part. I think it's a good valuation for the company, not so much of the taker. If you ask me, yes, I think it's actually slowly going back to where the heydays are for them. Although there's still a bit of a gap, but I think they're performing quite well in terms of that. Yeah, and hopefully, I mean, I don't know, SIAS actually complaining about paying too much for it. So let's see.
All right, I think we are past 8 p.m. already, and that is all the time that we have for today. We try to answer as many questions as possible. If there is any question that we cannot answer, you can look at Marco Polo website and contact the investors relations to forward your questions to them. Again, I would like to thank Mr. Sean Lee for joining us today, and we hope that everyone, the audience, find this Corporate Connect session very informative and useful. If you have any other questions, please feel free to contact the company on their website. In case you miss any part of today's session, you can rewatch the webinar on our SIAS Facebook and YouTube channel. Corporate Connect is our monthly webinar, so do visit our website to get updates on the next upcoming investor education program and initiative that we have at SIAS. You may also want to type in the chat box and let us know what is the listed company that you want us to feature next. And we'd like to thank Marco Polo Marine Management CEO for joining us today this evening. And I would like to wish everyone a very good evening, and take care and have a good night.
Thank you so much, Sandy. Thank you, everyone. Thank you so much.